Hello, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So today's webinar, I'm just going to look at a very simple strategy. This is for beginners. If you are looking for a strategy which you may want to here, we had a very good resistance there, and then we had a resistance here, we had a resistance here, we had a resistance here. I mean a support, and then in the past you can see that we also had some support there and a support there. So after you identified the previous day's highest high and the previous day's lowest low, the first thing is you wait for price to either break above that high or for price to break below the previous day's lowest low. Like in this case, we had a resistance in the past, a resistance. Earlier that day we had a resistance here. Almost the price was using it as a resistance, then the price broke above it. So after this breakout, you don't just buy immediately. This happens. Wait for price to at least extend upwards. Then while the price is somewhere here or is slightly above it, you have your pending buy limit here, and then you have your stop loss at this point here. So the take profit should be 2 times whatever you have as the stop loss. So if the stop loss is from this point, let's say this is how many pips, this is around 54 pips, your take profit should be 108 pips. That is somewhere, 108 is somewhere there. So let me mark that. So 108 is somewhere there. So this is the first thing you do. Identify the previous day's highest high, the previous day's lowest low, draw horizontal line touching those high and touching those low, then wait for price to break above that level. So the other thing is you may not want price to actually go up to this point since we are scalping, because this is a long time. This is like this is from 11 in the morning to around what time? Let me see, this is 11 in the morning to 3 in the afternoon. So this is not scalping as such. But if you are somebody who is interested in scalping, then you will still have your pending buy limit here, and then get out when the price has just hit profit. So I'm saying this, if you want to trade successfully, trade with pending trades. Don't use market orders. So the pending trades will give you the ability to enter without any, like there will be no such thing as slippage, and it's the same price that you've entered it. That's what will be used in the live market. So if you have a pending buy limit here, there is no such thing as ask or as bid. It is that price that you've put there. That's where the price will enter. That's where the trade will be entered. So it helps you avoid the spreads of, avoid the stress of spreads and uncertainty, where you don't know where the price is. If you buy here, it will buy somewhere here, or if you sell there, the price will sell at exactly the same place. It helps you a lot. It helps you a lot to avoid such things. So when the price is somewhere here, have your pending buy limit here, have your stop loss here, and then wait for price to go a few pips your way, and then close it. One more thing, the best way to close trades is actually not to have a fixed take profit if you're scalping. Ensure you are trailing. That is, if you've bought here and then the price has gone your way, maybe like this is how many points? Assuming this is like 5 pips. The price has gone your way like 5 pips. Instead of closing that trades real time, that is, you close everything, remove your stop loss from where it was, somewhere here, and then drag it and put it inside money somewhere here. So as the price now extends your way, you keep dragging it. As the price continues your way, you keep dragging it. As the price continues your way, you keep dragging it. This is exactly how to do scalping the safest way. And while it is true that we are scalping, we are actually using higher time frames to make trading decisions. We are not trading just because the prices, just because there's a signal on a lesser time frame, or because we are scalping. No, we are using a higher time frame for analysis. This is what happened the entire day. This is what we had. So you will find that if the price continues your way instantly, you will have got a lot of money by trailing. And if you had just your take profit fixed at some points here, for no reason you just have your take profit at 20, you'll find that you're stopped out instead of letting your trades to run as we wanted. So that's a good one example. Let's look at another example. Like in this case here, this is the previous day. We had the high here, and then we had the low of the previous day there. So in this case, you can see what happened. This is the highest high so far for that day. This is the lowest low for that day. There is a break. The price pulled back, touched that level, so you definitely took a sell. So after selling it, after you sell it, there your stop loss is fixed above this red line. If the price goes your way, immediately you sell it, maybe up to like 5 points. What you do quickly, drag your stop loss in money. Put it somewhere there. But as the price continues down, keep pushing your stop loss, keep pushing your stop loss. As this happens, keep pushing your stop loss. And if the price comes up and touches it, you are out in money. Does it make sense? It should make a lot of sense, because if you do it like this, you'll find that you have traded the entire month without any losses. You can even trade for an entire year without making any losses. If you're just following strictly whatever I'm saying now, you can trade like a year without any losses before eventually you meet a loss. Let me get another example. We have another one here. This is that day's highest high, and this is that day's lowest low here. So if the price goes your way, like after this breakout, the price went down, it continues up, while the price was somewhere here, you had a pending buy limit here, and then you had your stop loss somewhere here. So if the price just goes your way like 10 pips or 5 pips, you immediately drag your stop loss in money, and as the price continues up, you keep following it, you keep following it, you keep following it until the time when the price comes down and touches your stop loss, then you're out of that trade with profit. So that is exactly how to do scalping. That's how I do my own scalping. My main decisions, I make them based on a higher time frame, and then I now begin to trail my profits. If the price goes my way like 2 pips, 3 pips, I step out. So depending on the lot size you're trading, if you're just doing a very good lot size and the price goes your way maybe for 5 pips, you'll find that you've earned a lot of money within a very short time. The next example is this one here. So I want us to look at an example where it actually didn't work out. Okay, in this case it worked out. You can see also another one here. In this case also it did work out, because if you sold a break here, your stop loss somewhere here, the price went as high as this point, but it came back and went your way. We have another example here. This is a high, we have a low, then there's a high, the price broke above, you had a pending buy limit. So when the price goes your way, like here it starts to go your way, you begin to trail it instantly. So also this has gone our way. And the next one is this one here. We had this, so this if you bought this here, the price went down, but eventually it came back and went your way. We have another example somewhere here. This is the low, and then this is the high. There was this break, the price came back, you took the sell, and eventually it went your way. So thank you very much. That should bring us to the end of today's analysis. Today's webinar. We'll meet again next week at the same time. Thank you, and see you.